This conference will now be recorded.
So if you have any questions while we're moving forward, don't hesitate to interrupt me. And some of you may have seen some of this before. They do anticipate that there's going to be some people that are not going to get rehired, and some of the forbearance issues may prohibit people from being able to catch up. So there may be a increase in some foreclosures and potential short sales, actually. So far, 1 million mortgage borrowers have fallen through the COVID safety net. I think a lot of people don't even understand that there is a forbearance option out there. I do know, just from having done this in the past, back in 2007 in the last downturn, that a lot of people just stopped opening the envelopes that they were receiving from their lenders because they just knew it was bad news. And then they start getting notices from attorneys, et cetera, and they just throw them away. So it's really kind of unfortunate. People don't realize that just because they're behind and they've received these notices in the mail, they still have title to the property and they can still sell their houses. And so that's where we come in, trying to help these people that are a little behind and taking advantage of the fact that they probably have some cash in their property, probably more so than they realize, only because of the increase in the values of the houses across the country in the last year because of the low inventory, pandemic, interest rates, et cetera. So I think that a lot of the investment firms, like what's on this slide, have been stockpiling cash because they're going to go in and try to swoop in and take advantage of some of these distressed properties. And I would like to see us try to get fair market value for these houses rather than some of these investment firms taking advantage of people that don't realize that they still own it, and that in this low inventory market, the likelihood of they're getting top dollar, even for a house that isn't in perfect condition, is pretty strong. So I think there's a great opportunity if we can spread the word that if somebody's behind, they've missed some payments, sell now, because your credit is going to get hurt if you go through foreclosure, if you go through bankruptcy, if you go through a short sale. And that's changed dramatically now, because when your credit score is bad, it's very difficult to rent a house. It's very difficult to get car insurance. You can't rent a car. Everything is now based on your credit score and your ability to pay after the downturn. Forbearance is a relatively new term for me. We didn't talk about forbearance back in 2008 and 9. Forbearance is basically what's been offered during the pandemic in 2020 that basically comes from your lender that says, look, we don't want your house back. We want you to stay in your house. We want you to continue to be a homeowner. We understand times are tough, so we're either going to reduce your payment and we'll just roll over the difference into the back end of the loan and you can catch up later, or some of you have even paused the mortgage payments and then they'll just roll them on the back end. It isn't like it hasn't been around. It's just something we didn't talk about after the downturn in 2008 and 9. So the forbearance options, it's going to depend on who the servicer is. I don't know that all servicers have offered forbearances. It's going to depend on the type of loan that you have. It's going to depend on who your lender is. It's going to depend on if you have more than one loan against the property, like an equity line of credit or something like that. But I think if somebody actually asks you about forbearance, it's something they should certainly investigate with their bank, because I don't want to take advantage of somebody and say, oh no, you really need to move. If they want to stay in their house, they should certainly go try that first. I just want to come in as an option to say to these people, you still own your house. If you want to take advantage of the situation while the prices are at an all-time high, the interest rates are an all-time low, chances are you can walk away with some cash. And if your credit score hasn't been dinged too badly, go buy something else, or at least have the ability to go rent. And it's that you can see in the highlighted yellow, currently the lenders are allowing owners to skip payments without penalty. However, they're going to make them up later. And I've been looking for how they plan to do that, and I haven't really come up with any answers. Now that we have a new president in office, that this will probably come to play as we go forward with his economic packages. So defining a short sale occurs when the lender agrees to take less than what is owed to the lender. The likelihood of that happening right now is slim to none, although I will say I did some research today just to see what was going on the jcom.org site, and I pulled one up in Bridgepoint that is on the foreclosure list. It will be auctioned this month. They actually owe $514,000, which is a whole bunch of money in Bridgepoint. So my take on that is they're probably way upside down. A lot of the short sales don't get approved. They fall through, especially if there's more than one lien on the property. And every lien holder has to consent to the short sale. So back in 2008 and 9, when I was doing this, and that was the only thing I was ever selling, I had to negotiate with the condo associations because they weren't paying those fees. I had to negotiate on tax bills, equity lines of credit, mechanics liens. There were all kinds of things that had to be satisfied. And back when Obama was in office and doing this, he basically passed a law that said any secondary lien holder could only take up to X amount of dollars despite how much they were owed. It was ugly. So I'm hoping that we don't see that again, at least not in my lifetime. The lender's not going to approve a short sale if there's enough equity to cover the debt. I mean, that's obviously a given. And so therefore it becomes incumbent upon the agent to do an accurate market analysis to be able to prove to the lender the value of the property. The intent here tonight is that we hopefully don't have to go down the road of doing a short sale. But if you do, again, it goes back to the people in Bridgepoint. I checked on the MLS, they didn't list their house for sale. They're letting it go to foreclosure, which makes no sense to me. They could have preserved their credit score had they sold the property, had somebody smart enough to walk through with the lender and take a haircut, if you will, a percentage of what was owed, because you provide fair market value for what's going on in the neighborhood, what the house is worth based on the comparables, and they could have preserved some sort of credit. And now they may not be able to buy a house for 7 to 10 years. The process is very lengthy. It can take a really long time. Again, most lenders don't even want to go down the road of doing a short sale. They don't want to take the property back in their inventory. They assign somebody that's going to handle the short sale for you. They hire third-party companies. There's a website called Equator. That's where I used to go to do all of my short sales. They require me to load all of the documents, all the information about the house into the website, and then I wait for usually 2 weeks, sometimes 3 weeks, to get a notice, which requires me to go into Equator every single day. They don't do it via email. I have to go check the website. Once the processor has been assigned to it, then I am put on task. Within so many days, I have to get all these various documents loaded into the system so that they can make an intelligent decision as to whether or not to even consider doing a short sale for these people. What happened back then was they were wearing people out so much that people would quit. And so then I would have to reload all of the documents again because I was just being abandoned on the Equator site. So it's really tedious to go down that road, and I'm very hopeful in 2021 we won't be doing short sales. We can just help people avoid foreclosure, and that's kind of where I'm headed on this particular session tonight. The bank is going to require that anyone that buys the property have an arm's length affidavit signed by them stating that no family member is buying the property and allowing the homeowner to live in the house or going to quit claim it back. That's illegal. It's basically fraud. So you're going to have to sign an affidavit that it's actually being bought by somebody that has no knowledge nor relationship to the owner of the property. This is an old income and expense sheet. I would venture to guess that a lender today is going to have their own in the event you had to actually do this and provide this information to the lender to consider a short sale. But it gets very detailed, right down to how much money these people are paying for cat food. They want to know how much money they're spending at the vet. They want to know their trash bill each month. You can see on the list, there's just all kinds of things. They're thinking of everything. You are not going to be able to talk to a lender without having the authorization signed by the owners, and that means everyone, giving you authorization with the account numbers to talk to the lender in an effort to do a short sale. They have to complete this financial statement. It has to be completed in its entirety. They will kick it back if there are things in there that they know to be true, such as food. If it's not accurate, they'll send it back. Utility bills, car insurance, all of that. Then there's a hardship letter required as to why they couldn't pay their bills. And I've had that kicked back. It needs to be real. They want the tax returns for the previous 2 years, your W-2s. If you still have a job, they're going to want to see the pay stubs, and then months of bank statements to prove that you aren't getting money elsewhere and just choosing to pay other bills besides your mortgage. Again, I'm not going to read through all of this. Once it's on the website, you can go back and see all this. I actually have a printed format of this too, if you want a copy of it when the time comes that you have to actually do a short sale. The authorization sheet is to the right, and that just tells you the different lenders. You're going to fill in that name, the loan numbers, then the seller's going to sign it. They are going to allow you to call on their behalf, and frankly, the lenders prefer a third party involved. They would prefer to talk to a realtor or somebody else other than the homeowner, because the homeowner's mad. And again, it's no different than what we talked about in the sales meeting yesterday. We're going to be level-headed about this. We're a third-party, unemotional person trying to help get the lender and the buyer to come to some sort of a meeting of the minds, so everyone is happy at the end of the day, if you can call a short sale happy. They did loan modifications back then. I don't know if they'll resurrect that or not. That may come after the forbearance. That might be something that they throw into that. The mortgage modifications did not work primarily for anything I did back in 2008 and 9. They were outrageously high interest rates. They took the back payments, the penalties, the fees, and loaded them into the what was due, the new mortgage, and people couldn't afford to do it. So it was a complete total waste of time. It was very unfortunate. They claimed that it could save you from being foreclosed upon, but anyone that ever got a loan modification ended up losing their house afterwards because the payment was even higher than what it was before. If they couldn't make the payment on the first mortgage, why the hell would they think they could make it on a mortgage modification? The benefits, they're trying to avoid foreclosure or short sale and keep you in your house. The idea was originally to reduce your monthly mortgage payment, but it didn't work. And then trying to protect your credit history. So, as I mentioned the other day, if you go to Zillow, there are pre-foreclosures online, and I had checked a couple of months ago, and there were about 600 of them on there. And your buyers were invariably looking at Zillow for houses, and they will run across that says pre-foreclosure, and they think they can buy that, and they think they can steal it. But a pre-foreclosure house is not usually listed. In fact, today when I was on there, there were only 5. As you can see up here under the Louisville, Kentucky foreclosures, there were 5 listed as pre-foreclosure on Zillow, 5 actually listed on the MLS. The other 588 are not listed for sale, although they will say pre-foreclosure next to them. Now, this is where it gets really tricky, because when you're explaining this to a buyer that calls you on the phone, that basically means that they've missed 3 payments. It could be that they were ill. It could be that they're going to make it up, that they talked to their lender, they've worked out a payment plan, and it's not a lis pendens situation. They have not received a notice of foreclosure. It strictly means that they're behind in their payments. So that doesn't mean that it's ripe to be stolen by a buyer. It doesn't mean that that seller's even considering, or the owner is even considering selling their property. What this does is give us as realtors somewhere to start to try to find a property and see if somebody is actually in a situation where we can help them by preventing them from losing their home. So just for the heck of it, I picked on one. As you can see, there was this one red dot right here in Linden. So I clicked on that red dot. This is what popped up. This is a house on Jefferson Avenue. It's off of LaGrange Road, if I'm not mistaken. in the zip code 40242. Zillow has given it a Zestimate. That means nothing. They also have figured out that there's a $76,000 balance due as of April 9th. Home is in default. So it prompted me to go online and look. So I pulled up 1626 Jefferson Avenue, and I see that the owner's name, and I didn't even log in, I just typed in the address and it pulls right up with the owner's name and the parcel ID. The owner is BJR Properties. So now it's telling me that it's most likely a rental property. I then go to the Jefferson County Clerk's office, which does not require a login. This is where you find the online land records. So this is what pops up from the MLS when you click on Jefferson County Clerk's office. Then over here, when you click on the legal records with the first circle, this pops up. You go down here to this red link, online land records. When you click on that, this pops up. Now I know the party's name because I just pulled it up on the PVA. So I'm going to type in BJR. It's BJR Properties. Probably not too many BJR in the Jefferson County Clerk's website. So I typed in just BJR, and what pops up is this. So apparently there were 29 listings under BJR. And while I was on the PVA, I happened to click on the deed booking page, which is a hyperlink into the county clerk's records, and I noticed that Brian Rao transferred the property from his name to BJR Properties several years ago. And apparently he has a few other houses that are in this BJR Properties LLC. So this goes back to 2007, which is when he originated his LLC. And as you can see, he has had a series of bad luck with all of these Liz pendants right up until May of 2020 on this house in Brookhaven. Interestingly enough, over here, we've got a problem with Park Place Owners Association, Wildwood Condos, Metro Government, Department of Codes and Regulations. So everybody's after this poor boy. So I pulled up one just to see what was going on, and it looks to me like he's had a problem with this particular property at 2614 Woodsdale Avenue, and New Res Mortgage, which is his lender, is against Brian himself, the properties, the BJR LLC, the Park Place Owners Association, Wildwood Condominiums, Metro Government. So this Liz Pendants, he has a lot of liens against this property. My point on this, and why I left this one up specifically, this poor boy is probably too late to help. I don't know how you settle all of this debt and actually get this house sold. Now I will say that he has $185,000 estimate on there, which seemed high for Jefferson Avenue to me, but he only owes $70-something thousand. You could drop a note in the mail and just see if you get a response. And again, his mailing address was on the PVA under BJR. That's where the tax bills go. So maybe it's worth a note in the mail that just says, if you're interested in selling your properties and saving your credit, I'm here to help. Make it a very quick note. In fact, when I was doing it before, I had a pre-printed typed letter that basically said the same thing. In the event you'd like to avoid foreclosure or short sale and preserve your credit, give me a call. I'd be glad to help walk you through the process. And that's all I'd say, and I'd mail it out. And I got some people that were curious about how that worked.
Allison, I'm sorry to interrupt. I'm just curious to see how you knew how much he owed.
$76,341, according to Zillow. That's
Okay,
a start.
so you can go by Zillow?
Well, I mean, it's a starting point. I mean, that's just the balance due on a mortgage, most likely. I got liens from homeowners. What happened is, in this particular guy, he has all of these different Liz pendants, And so basically now they have attached the liens on all of these properties to all of his properties. He's tied, as soon as he sells one, that the proceeds of that sale are going to have to go to satisfy all of these debts on all of his properties. Okay, so that's why he might be one that you might not want to get involved with.
Great, thank you.
Yeah. A home in pre-foreclosure is more than 90 days late on the mortgage. And the bank has not necessarily begun the foreclosure process in 2021 because the government prohibited from people foreclosing on people due to COVID. So we'll see how that plays out in the next few months. When Trump was president, that was due to expire in January. My guess is that they will prolong that and prevent foreclosure for a while, although they are having foreclosure sales right now at the jcom.org site. I pulled it up. There are 2 sale dates in January, 2 sale dates in February, and so far only 1 in March. And I'm going to show you how you see that information in just a minute. Be aware that a pre-foreclosure property is not necessarily for sale. That's the part you're going to talk to your clients about when they tell you they want to buy one. Even if the home can be purchased, there are issues you need to consider. If they haven't paid their mortgage, they probably haven't paid the taxes, the HOA fees. They probably didn't pay the roofer. They've got all kinds of problems that could pop up if you did a title search on these properties. The seller's obviously not going to be able to make any repairs. So if your buyer thinks they're going to steal a property and they're going to get a loan on it, that's probably not likely either. And back in 2008 and 9, all these first-time home buyers were being prodded by their parents, oh, go buy a foreclosure, buy a foreclosure. Well, you couldn't because the places weren't habitable, and the lender wasn't going to lend if it didn't have flooring and cabinets and sinks and stoves and roofs and didn't leak, etc. So you basically we were only selling them to people that either had cash or were investors, or to a local bank that would help people out. So it's a different beast completely. So it will not qualify for FHA or VA if it has repairs that are deemed necessary for that appraisal by FHA or VA. A short sale on your credit score could cause it to drop at 150 points. And I go back to, it didn't used to matter so much. People my age used to be able to go and rent a car by just merely showing them your driver's license and a credit card. Nobody ran your credit. Now you can't get homeowner's insurance if your credit score's out of whack. You can't rent a car. It's hard to rent an apartment. It's really going to mess with your ability to buy a new car. So it pretty much limits your ability to live life comfortably. So again, I go back to the whole idea is to try to rescue these people before their credit gets in any deeper than it already is. Lenders have a legal right to pursue sellers for unpaid balances, and those legal actions can actually further damage your credit because now you've got attorney fees on top of it. Short sales have tax implications. Obama created a form back in 2008 and 9 that basically, if the seller was savvy and had a good realtor like me who was presenting these sellers with these forms, then it would erase that what was construed as appreciation or profit from the sale. It would erase that tax liability. So let's say the house was worth $100,000. You owed $100,000. You sold it for $70,000 in a short sale situation. The IRS was looking at you as though you had a $30,000 gain, and therefore that was a taxable income on your tax return. So Obama created that piece of paper that, if presented properly and signed off on, erased that gain of that $30,000. It disappeared. That form doesn't exist anymore. I don't know exactly how that's going to play out if we get into a short sale situation in the future. Again, I'm trying to avoid short sale. I just need these people to take advantage of the fact that the market is strong, the interest rates are low, the values are high, and they should be able to come out at least at zero, if not walking away with some cash. And over the years, we've actually helped some people walk away with $30,000+ they didn't know they had equity in their house. They thought they were just going to give the keys over to the bank and walk away. And instead, they walked away with cash. Again, foreclosures or bankruptcies can keep you out of the ability to buy for 7 to 10 years. VA and FHA, if you get back to work and you qualify and you have a decent income, sometimes will allow you to buy as soon as 3 to 4 years, but that's strictly a government loan. You will not be able to do a conventional loan for at least 7 years. So finding these. Foreclosures are going to be readily available on the jeffersonjcom.org site. This is the Jefferson Circuit Court Commissioner site called jcom.org, jcomm.org. When you pull it up, the sale calendar right here is what I pulled up today and saw that there were 2 sale dates at Louisville Slugger Field, because it has to be outside because of COVID, 2 in January, 2 in February, and so far 1 in March. When you go to the upcoming sale icon here and click on this, it's going to show you who is being sued, who the attorney is that's handling it for the person suing for the lis pendens, and the address of the property is right here. So this is going to have a handbill, that's the blue hyperlink underneath it, and when you click on it, this is what pops up. And in this particular case, this guy only needed to raise $5,800 in order to buy this property. This is the Commonwealth of Kentucky Metro Government suing William Landrum. And I'm going to guess it might have been a past due tax bill. The other thing that they have is the appraisal, which unfortunately is still handwritten, which just blows my mind. But when you click on the handbill, you get this. When you click on the appraisal, you get this over here. And it has the property address, and it has a little bit of information about it. In this particular case, Chestnut Street's a vacant lot. All right, so they established the value of this vacant lot at $14,000. Now, this is not this, so don't misunderstand what I'm doing here. I just wanted to pull up one and show you that that's what that is. Now, it's showing you the sale date, 9/24/2020. When you scroll through this site over here, you can scroll down to houses that haven't been put on the docket yet with a sale date. Those are the houses you want to go after. It's going to require some homework. Once you scroll down and you get past to where these don't have sale dates, these sale dates they won't have a handbill because the appraiser hadn't been there yet. They don't have a date. Those are the ones you want to go after, and it's going to require some homework. Handbill not available. So I did this presentation back in September. So the date has been made for November. They've got over 2 months. You could actually convince them to list their house, get it under contract, and then you're going to have to reach out to this Daniel Albers, who is negotiating on behalf of the person suing the owner of the property to get them to withdraw the sale. Notice this has been withdrawn. That's how that happens. They have either worked out something with the bank themselves, or somebody has gotten a hold of them and helped them either sell the property, do a short sale, whatever the case may be, but they got that sale withdrawn, so now they don't have to go through the foreclosure process. So that's what we're trying to help these people do. Look for properties that are several months out so that you can go and talk to them and tell them time is of the essence because we need to get it under contract as quickly as possible. And back in the day, I was working with Samson Rothfuss, which is out of Ohio, and I noticed today that they're still doing a lot of these. You get on the phone, and I'm blowing the phone up, trying to get a hold of these people to tell them I've got a contract, fax it up to them, email it to them, get it up there so that they can talk to the lender. The attorney is the only person who's going to be able to pull it off of this list. I am not going to have the ability to talk directly to the lender. I'm going to have to work through this attorney. There's the difference between short sale and the foreclosure sale list. So the people that get on this list sometimes don't even realize they're there. It could be because they're so far behind on their HOA to their condo association, or the subdivision HOA can sue them for back HOA dues. Third-party companies that buy the past due tax bills. The past due tax bills are advertised in the Courier Journal every year, so they'll come up. I think it's in April, if I'm not mistaken. It might be March or April, and the paper will be filled with people who did not pay their 2020 tax bill, and third-party companies end up buying them because the interest that's accrued on those tax bills is at 12% annual. So they're making a boatload of money on past due tax bills. Once they have owned the tax bills for several years, then they can turn around and foreclose on that house in hopes that these people are stupid enough to say, here, just take the keys. And so maybe you owe $12,000 in past due tax bills, but your house was worth $200,000. We only need to settle the past due debt on the tax bill. Maybe you don't even have a mortgage on the property. The Mayan Cafe.
That was my next question. What do you do when somebody doesn't have a mortgage? Pardon me, I didn't mean to interrupt you, but you nailed it right there.
That's my next story. The
Gotcha.
previous owner of the Mayan Cafe didn't pay her tax bills. They ended up going through foreclosure. She didn't know it. And the guy who owned the tax bills ended up owning the building. There was no mortgage on the building, but he took title to it because he foreclosed through the jcom.org site. The judge slapped his gavel and gave him the deed to the property. Hundreds of thousands of dollars landed in his lap. Beautiful. So if you find anything that has a low amount due on here, that's the one you want to talk to first. The other thing to keep in mind is I'm looking at zip codes too. Like this one on Tavener Drive, 40242. There is no reason why you can't talk to those people and try to save them from losing their house. Question?
I got a question. If the handbill is not out, well, where would we find what's owed on the house?
RPR is a good place to start. All mortgages are recorded in the county clerk's office. So you can look for mortgages underneath the property address or the name of the owner, I mean. So say they refinanced in 2017 and they borrowed $100,000 in 2017. You know right off the bat, all the interest is what's paid up front, not principal. So they still owe very close to $100,000 on that house. And that's public record in the Jefferson County clerk's office. Or at the very bottom of RPR, if you go in there and look at that house, RPR will tell you if it's a distressed property too. So you can take that address on Jefferson Street, plug it into RPR, and if it says distressed, you know it's true. And then at the very bottom, if they have a mortgage on it, oftentimes they'll have the balance there as well and who the lender is. A lot of the houses in the zip codes that are going to be like 40203, that's probably a lien for a violation. It's probably a boarded up house, overgrown or whatever. That would be this one, Department of Codes and Regulations. So the city of Louisville is suing this person for this house on Hodge Street. I don't know that you'll find the owners to these boarded up houses. They're probably grateful for the city taking some of these houses. So I'm not sure I'd worry about that too much. Again, I go back to zip codes are going to matter. There's no reason why that house on Tavener should be in foreclosure. You should be able to help those people. And that's US Bank. US Bank, they didn't pay their mortgage. Estates, we sold one in Hurstburn actually that we found on this list several years ago. And the guy had inherited it from his father and had no idea that his father had taken out a mortgage on that property. And so he didn't know to pay any bills because he didn't know there was a mortgage on the property. We ended up selling it and paid off the debt, which was like $30,000, and the guy walked away with hundreds of thousands of dollars in his pocket. So that's a big deal. Estates, they don't often realize that they owe money. This was kind of funny. I pulled this up. The amount to be raised in this particular judgment was $53,000, and the guy who won the bid didn't pay. And because he didn't pay, Now he has been banned from bidding on this property. Thought that was pretty funny. I just happened to find that by accident. If you go to the courthouse sale and you buy the property at the courthouse door, you have to put up so much money, and that's going to be in that the handbill. It's going to show you how much money is required, and then it shows you how many days you have to actually perform. If you don't perform, you basically lied to the court. That's what this is all about. So it says the full balance is paid within 30 days. When the person's purchase price is paid, then they execute the deed to the property. So even if the house is sold at the courthouse door, until that debt is satisfied, the owner of the property still lives in it because the deed hasn't transferred. But they're done. If the court has slapped his gavel at the courthouse sale, the new buyer owns that property as soon as it's paid for and the deed is transferred in the courthouse. This is big too. It's not guaranteed that it's going to be free and clear of all encumbrances. I actually had an investor I was working with who bought a house from the city of Louisville at the jcom.org site several years ago, fixed it up, rented it out, hired me to sell it, went to the closing table, and there was a past due city tax lien on the property. He bought it from the city, and the city didn't pay off their own tax lien. And so the attorney looked at him and he said, please tell me you got owner's title when you bought it. And he goes, of course I did. I bought it at the JCOM sale. Of course I bought owner's title. So they paid the city debt tax bill, and then the owner's title policy reimbursed my client for that amount of money after the closing. So keep in mind, if you're going to buy a property at the courthouse sale, please make sure you or advise your clients to get owner title, because you don't know what's going to pop up down the road.
I got something to say about that. I went to the courthouse to bid on it, and they never said that you had to be pre-approved
Right.
and show the pre-approval like a week before. So I was there ready to bid, and then they said I couldn't do it because I had
Right.
no pre-approval.
Yeah,
And they don't
that's
tell
true.
you that in
They didn't
advance.
used to require that. I'm glad you brought it up. That was not a requirement back in the day, but it is now because so many people were in default. Yeah, thank you for chiming in. That's right. Your strongest competition if you're going to the commissioner's sale trying to buy something is that the lender is going to be there bidding against you. The lender needs to make sure that they come out whole. And back when I used to go to the sales years ago, the lender would end up buying back, and they don't really write a check for it. They just take possession of it to keep their books whole. And back after the downturn in 2007, they were taking so many houses in inventory that it took years for them to go through letting them out of their bookkeeping, because you can't just take a massive $1 million loss right and left every other day with all these houses. They had to, they dissipated slowly in order to keep themselves afloat. But that is your strongest competition at the commissioner sale is going to be the lender.
Yeah.
What's the
The other
Go ahead.
thing I noticed about the mortgagers, the banks, is that
Yep.
they would set a set amount that they would take back for the, I guess, the amount that was owed. And so nobody could bid less than that amount. Otherwise the bank
Exactly.
would take it.
And that's what's on the handbill. They're going to tell you right up front the amount needed to satisfy the debt. So unless it's some third party that's not a lender, you might get it for less, but more often than not, you're going to have to satisfy the debt on the handbill. Absolutely. That's the purpose of it, to let you know. So I go back to, if it's $200,000 house and the debt is $30,000 to satisfy, why wouldn't somebody go and try to buy that house? But I go back to, it would be prudent to run a title on it beforehand to make sure that there aren't other liens against it that hasn't been divulged in the commissioner's sale, such as the past due city tax bill. Once the property is taken back into the bank's inventory, it's called an REO property. That's real estate owned. Weichert Relocation, when they take their properties into their inventory, they too are called real estate owned, because it's a third party that owns it that's not going to live in it, It's just on their books. In 2021, it'll be very important to make sure that your seller is current on their mortgage. By checking the county clerk's website, you can see if the Liz pendants was filed, and I showed you that earlier. It says it's right in your face. They also have release of Liz pendants. So you will see if you scroll down there, it has a Liz pendants filed in 2017, and it has a release of Liz pendants later in 2017 or 2018. They've either renegotiated their loan, gotten a loan modification, refinanced, sold it, whatever the case may be. But be sure to look for that release of Liz pendants. Mortgages are typically filed as well as the releases in the courthouse. Again, so I can go back to, you can look and see when they bought the house, because the deed's going to be there, and how many mortgages they've had on the property, whether they've refinanced several times, whether they have an equity line of credit, whether they have past due tax bills. There's no login. All that stuff is public record. If the seller is behind and you anticipate there's going to be a short sale involved, I'm glad to walk you through it. I'm glad to go with you and talk to these people. I don't think we'll see a whole lot of short sales in 2021. I think that basically what we're going to see is people are freezing. They lock up, they quit opening the mail, and they don't realize that they have the right and the ability to sell their house. And I hate to see people walk away from equity in their property, especially when people don't realize that their house is worth substantially more than what they thought. Always remember that if you are going to take a listing and you suspect that it might be a short sale situation, that you must disclose that in the MLS. If it is not going to be a short sale situation, you don't even need to bring it up. You don't even need to bring that it's in pre-foreclosure unless it is in the jcom.org site, that it is on the list for foreclosure sale. Then you would want to disclose not only in the MLS, but if you got an accepted contract, it must have the verbiage in the contract that says this is subject to the release by the lender and their attorney, because you can't be guaranteed that that attorney is going to work on your behalf and get the lender to release the Liz pendants before the time frame that it's supposed to go up for sale at the jcom.org sale at Louisville Slugger Field. Does that make sense? No questions. Okay. That's all I got. Anybody have any other thing they want to talk about? I mean, it goes on. Oh, whoops. No. All right. I'm not going to go into this. That we don't need to talk about short sales yet. If it gets to be that later in the year, then we can revisit the rest of this presentation. Yep. Question?
Allison?
Yes.
Hello. Allison?
Yeah.
Okay, it's Jim.
Yeah.
Deidre and I have another one coming up to be listed Monday.
Okay.
I think she already talked to you about it.
Yep.
Good. That's all I needed to know, because you know it's the same lender as the one we had back in the spring.
Okay, good. That's great. Yeah, I'm glad to help you any way I can.
Please, this one.
Did the lender reach out to you to do that?
No.
You just got lucky
and I'm
that
not
way.
reaching out to him until we have all the listing papers.
Okay, perfect.
Done. Okay.
All right.
Thank you.
Yeah, glad to help.
Thank you. Bye.
All right. Anybody else? Questions, comments?
Okay, so on the JCOM site,
Yep.
whenever I pull it up, everything I see has a hand bill. What am I doing wrong?
What are the dates above the handbill?
January and February.
No March yet?
Nope.
I don't know if they're waiting to see what's going to happen with the federal government. That might have something to do with it. What's the last date in February?
Let me scroll. The 11th.
Yeah, it doesn't give you much time. I mean, it's still a few weeks out. I don't know if you want to pick and choose a couple of the zip codes where you think you can save somebody, but I mean, the market is moving so quickly that I don't know why you wouldn't at least try to go knock on somebody's door and say, you understand your house is on the docket for the foreclosure sale? And if they say, yes, we don't care, then fine. If no, they didn't know it. Say, let's list your property today, get it on the MLS and get it sold. Because if you can get a contract on it, I mean, I got one and sent it up the day before the sale to the Samson Rothfuss people, and they got it released. Again, it goes back to the bank doesn't want to take it into inventory. So if I can come up and prove to them I've got a viable contract on this property, they're all about that contract. They don't want to have to take the property back into inventory.
Okay, and we just do a regular listing and we don't have to contact the bank or anything in order to list it?
No, you do not.
Well, I contacted the attorney that was involved between the bank and the foreclosure. And I told them that we were putting a house up for sale. And so I made them aware and they kept in contact with me.
Good. That's good. Again, I mean, of course, that was a few years ago, right? It's a different
Yeah, it was-
situation today.
Oh, about
But,
3 years.
Yeah, if you can actually get a hold of the attorney, more power to you. The one that Jim's talking about, it's a local lender. It's not a bank, and he's very easy to reach out and talk to. So again, that's beautiful. But I'd go back to, you don't necessarily want to look at one that's going to be US Bank. I'm looking for homeowners association fees, issues with tax bills, issues with code violations. Those are the ones that should be really easily rectified.
Can you give me an example of code violations? I mean, I know, I probably know, but I want to hear you. It's just a lot to process.
It's not going to tell you what the code violation is on the foreclosure notice, but usually it's overgrown, boarded up, trash in the yard. You know, you have to keep your house up or you
Oh.
get a violation, code violation.
I got you. Okay.
Would we be able to use Redx to get the phone numbers to these homeowners?
I wouldn't call them, I'd go knock on the door.
Okay.
But yes, you can.
Allison,
When you don't
what
have
do
any
you,
time to waste, it's too easy for somebody to say no on the phone. But if you go stand on their doorstep and say, you understand your house is on the docket to be sold at a foreclosure sale, why have you not listed your house? Where are you going to go?
Okay.
Allison, Jim again.
Yeah.
Knowing that who Deidre and I are dealing with again,
Yeah.
I told Deidre and I told the seller, she already told the lender that we would be listing it, and he was very accommodating to that.
Yeah,
and
exactly.
Nice accolades, but I'm not going to contact him
Right,
until it's actually listed.
right.
Okay,
Yeah.
good.
I'm with you. Absolutely.
Okay, thank you.
No point in it.
No,
Any other questions?